Amit and Sandeep are sitting together. Watching an ad of iPhone 14 on his laptop, Amit says, "It's an amazing phone," and he's planning to buy it. Sandeep asks him whether he has the money to buy it in the first place. To which Amit asks Sandeep if he has heard about digital loans. It's very easy to get a digital loan and he would buy the iPhone 14 Pro through digital loan. To which Sandeep replies, does he know how dangerous it is to take loans from digital loan apps? The interest rates are very high. Many a times, they start charging daily interest and penalties for late repayments. People take loans in an instant, but if they default on the loan payment, then bullying, blackmailing, and even extreme situations have arisen. Amit was surprised and shocked. He asked Sandeep what was he talking about. He never thought about this.
Several fintech companies have apps available online that provide instant loans, especially when people like Amit need a small amount of personal loan for their needs. These apps easily provide loans. However, there is a price to pay for this convenience. High interest rates, late penalties, and agents who harass customers. They put pressure for loan repayment and extract more from borrowers. They offer another loan to repay the previous one. To protect people like Amit, RBI and Google have introduced new security regulations so that easy loans don't make life difficult for you.
Google banned more than 3,500 digital loan apps in 2022 for violating regulations. However, as soon as one app was banned, 5 new apps would emerge. To prevent this, Google has now introduced a new security policy. Under this policy, loan-giving apps will not be able to access users' contact numbers, photos and videos, call logs, and location details. Digital lending app companies registered on Google Play Store in India will have to provide an affidavit. All terms related to lending will be clearly stated. Additionally, copies of necessary documents must be submitted to Google to operate the app. If an app is authorized by the Reserve Bank of India to provide loans, Google will also require a copy of its license. This new policy by Google came into effect on May 31, 2023. It will help in curbing the arbitrary practices of these apps and in protecting users from exploitation. Now let's take a look at the history of digital loan apps.
जो डिजिटल लैंडिंग ऐप से सबको थोड़ा प्रॉब्लम होगा इनिशियली बिकॉज दे हैव टू मीट द न्यू क्राइटेरिया. सो गूगल इज ऑल्सो इंश्योरिंग जो गवर्नमेंट के जो स्ट्रिक्ट गाइडलाइंस जो गवर्नमेंट ने दिया है वेदर ये हम पालन कर पा रहे हैं कि नहीं, बिकॉज सब डिजिटल लैंडिंग एप्स एक हिसाब से दे विल बी रेगुलेटेड, दे विल अंडरस्टैंड उनको कस्टमर का जो इंफॉर्मेशन है, कितना इंफॉर्मेशन रखना है, कितना इंफॉर्मेशन शेयर करना है, और जो भी गाइडलाइंस के हिसाब से है, तो इट इज आई थिंक सो कस्टमर फ्रेंडली.
During the COVID-19 pandemic, many apps emerged in India that provided instant loans. These apps were able to make a large customer base. You can gauge the popularity of these apps from the fact that digital lending market was only worth $9 billion in 2012, while it exceeded $150 billion in 2020. This was more than 15 times its previous value. It is estimated that by the end of 2023, the digital lending market will be worth around $350 billion. So, how do unregulated apps work? While the digital lending market has been growing rapidly in India, related challenges have also increased at the same pace. Many digital lending apps do not comply with the regulatory norms. That is why these are unregulated. Needy individuals often grant various permissions to these apps without carefully considering the consequences. For example, loan providing apps request for permission for access to your phone book and photo gallery during the download process. Without these permissions, the app will not function properly. This forms the basis of digital exploitation. Misuse of photos and threatening messages or calls to your friends, relatives, parents, in-laws or boss can disrupt your peace. Now, Google has implemented regulations to prevent the mishandling of such information. So then, what are the regulations of RBI? In September 2022, the Reserve Bank of India issued guidelines related to the regulation of digital lending. According to these guidelines, companies involved in online lending must establish a panel of recovery agents. While approving a loan, banks or financial institutions must share the list of recovery agents with the customers. The customer must be informed regarding what time and which agent will contact him for loan recovery. Additionally, the mobile number and email ID of the recovery agent will also be shared with the customer. During the recovery process, agents cannot charge any additional fees to the borrower. Cash recovery for loans will not be allowed. Companies will not be able to impose penalties on customers beyond a certain limit in case of loan defaults.
कोई भी ऐप जो होती है या कोई भी बैंक्स एनबीएफसी जो होती है वो आपसे आपका पर्सनल इंफॉर्मेशन जो होती है वो लिमिटेड अमाउंट में ही शेयर करना पड़ता है. अगर आपसे ज्यादा कुछ शेयर करने बोल रहा है या फिर वो आपको कह रहा है कि आपको नहीं ये तीन चीजें और डाउनलोड करनी है, तो इमीडिएटली आपके अंदर एक रेड फ्लैग आ जाना चाहिए और तुरंत इस चीजों को आपका ध्यान रखना चाहिए. और बहुत सारे फ्रॉडुलेंट एप्लीकेशन जो होते हैं इसका भी आपको पता करना चाहिए. मेरे हिसाब से एज ए कस्टमर आपको लोन लेना है, अर्जेंट लोन लेना है, बट आपको एक 10 मिनट का एक्स्ट्रा ड्यू डिलिजेंस करना है वेदर वी आर टेकिंग इट फ्रॉम द राइट सोर्स, है ना, जिसे कहते हैं.
On these platforms, the interest rate for loans is high. It is important to understand the difference between regulated and unregulated platforms while looking for a loan. If you pay attention to certain things, you can avoid getting deceived.
Now, the first thing that you should do is apply for such loans only from RBI registered lenders. You can find the list of registered banks and non-banking financial companies on the RBI website. Ideally, take loans from financial institutions that are registered with the RBI. Check the official website and the physical address of the company from which you are taking the loan. And the most important thing is that you should never take a loan without an agreement. Without a loan agreement, there is no written proof of the lending interest rate, penalties for late repayment, and the amount to be repaid. The government and Google are contemplating rules, but it is also essential for you to filter these platforms at your own level.